Venezuela, 2013 to today. A situation caused by both political and economic reasons that range from the government controlling parts of the economy, shortages of food, electricity, medicine, riots and political instability that stem from that, oil revenue tanking even though they have some of the largest oil reserves on the planet.
Gasoline has been in short supply there for years. The shortage has now reached unsustainable levels and is hitting the capital Caracas in the middle of the pandemic.
Economic sanctions from the US and more, with hyperinflation starting at modest levels in 2013 to peaking at around 1.6 million% in 2018, with the Venezuelan central bank estimating that the currency was inflated by 53.8 million% between 2006 and April 2019.
There's no coffee, no flour, no oil, no butter, no cornflakes. There are a lot of food products missing that aren't luxuries, just normal food.
They were able to tame the hyperinflation back down to better levels in the low thousands of percents in recent years, but that still means that for the average everyday shopper on the streets, prices for goods are doubling every few weeks. One woman said, "Everything is rising so quickly that what I deposit in my account doesn't buy anything. All we can do is eat less and stretch what we have." Which brings us to today, in the West. The United States, January 6, 2020 to January 4, 2021. Coming straight from the Fed, we started this period with around $4 trillion in the system. 1 year later, that number is at $6.7 trillion, meaning that over 40% of all US dollars were printed in just the last 12 months.
Well, we've had an incredible surge in government spending. A lot of it related, of course, to COVID-19 and to the ordered, economic shutdown and the fact that a lot of people were no longer out there earning money. And so the government looked to replace what people were no longer earning by printing money, which is what they did. You had all this government spending, but there were no additional tax hikes to cover the cost, nor did the government try to prioritize any of its spending. It didn't say, well, maybe we should spend less on the military so we have more to spend on fighting the pandemic, right? They didn't budget their resources. They just said, well, we're just going to spend more money on the pandemic, but we're not going to spend less on anything else, and we're not going to raise anybody's taxes to pay for it. So where'd all the government spending come from? It doesn't come from thin air. The money has to come from somewhere. And if they're not going to make room in the budget by cutting spending, if they're not going to increase taxes to get additional revenue, well, then they just crank up the printing presses. So that's where all this new money came from. The government printed it and spent it into circulation through all these programs.
And from the looks of it, no one seems to be in a rush to slow things down.
A sweeping nearly $2 trillion relief package to tackle this pandemic, one of the largest in our nation's history.
In fact, no one is really talking about this at all.
And right now, nobody seems to think that this is a problem. People seem to think that we've stumbled on the equivalent of a monetary fountain of youth. People like to call it modern monetary theory, which is we can have whatever we want as long as government prints the money to pay for it. That there's no limit. That government is free as long as they print money. Now,
and strangely enough, we haven't seen much inflation for everyday goods like gas and food. Prices definitely haven't gone up anywhere near 40%, and other countries seem to be following suit. So the question remains, where's the inflation? The reason why we haven't seen inflation yet is because the amount of money being printed is only one of the factors that contributes to inflation. To get inflation, here's everything you need. Number 1, industrial output. How much stuff an economy makes. The more stuff, the more supply, which equals lower prices. The less stuff, the higher the prices. Number 2, employment. Too much employment leads employers fighting over workers, which leads to higher wages, which leads to higher prices. Too little employment leads to employees fighting over jobs, which leads to lower wages, which leads to lower prices. Number 3, the money supply. The main topic of this video and probably the easiest to understand. The more money in an economy equals higher prices, as long as that economy is producing the same amount of stuff or less stuff. And number 4, if the money is exchanging hands, and if so, how fast, also known as the velocity of money. If you print a bunch of money but that money is spent on food instead of gas, food is going to experience inflation, but gas isn't. If you want a more detailed explanation of this, I highly recommend you watch the video by Economics Explained on the subject. It will be linked below. And in our case right now, the money supply has shot up a ridiculous amount. But the other factors have been keeping inflation down. Industrial output, it's been down from businesses not being able to operate, which leads to less stuff. But there's also less demand from you and I to buy those things, so its impact on how much inflation we have is kinda neutral. Employment has also definitely taken a hit, and with less employment comes lower wages, which means lower prices, not inflation, and the velocity of money. It's pretty slow for everyone with all the uncertainty in the air. People don't want to spend money right now if they don't know if they're going to be able to keep their job or find a new one.
And I think the reason for that is a lot of the money that we print, as is always the case, ends up getting exported. If you look at our trade deficits, they surge to record territory, especially in goods, where we had all-time record high trade deficits. So a lot of that money got exported, and it wasn't here in the U.S. where it would have been used to bid up the price of goods and services.
But you know what they are going to spend money on? Things that only go up, like Tesla stock, every other stock, real estate, and Bitcoin. So we are seeing plenty of inflation happening right now. The S&P 500 has seen around a 70% increase since its crash in March, the same exact period all these new US dollars were printed. Home prices have gone up by 8% since January, which is higher than usual, and pretty much everyone and their mom knows how well Bitcoin has been doing. But instead of calling it inflation, we call it the stock market rally, the real estate boom, crypto's time to shine, or the great crypto bubble, depending on who you ask.
When inflation pushes up asset prices, people don't complain because the people that own those assets, of course, feel much richer.
Right now, the downward pressures are counteracting the upward pressures, and we are in a fragile equilibrium.
So inflation can work its way into the economy through various methods, and so prices can be affected in different ways. But ultimately, it's consumer prices that are where all the inflation ends up once it finishes making its way through the economy, because that's really all everybody wants. I mean, people don't buy stocks because they want to own stocks. They buy stocks because they think they'll be able to buy more consumer goods with the profits from their stocks. But ultimately, those profits have to be realized, and then they have to be spent on consumer goods, and the price of those goods can go up.
Which begs the question, should the money printer keep going burr? Can it keep going burr?